Hey guys, a quick market update on Memorial Day as we honor our fallen. Here's the S&P 500 on the monthly, weekly, and the daily charts, and everything looks actually pretty good as we are starting to break above that important neckline at 4,200. And there's plenty of energy for the price to do so. And the reason I say that is because it's been very choppy over the last few weeks and actually few months. And that builds up a lot of potential energy for eventual trending. But is that going to happen? If you think about it, the driver of the S&P 500 has been 7 stocks in the NASDAQ, doing all the heavy lifting. Here's the chart of the NASDAQ 100 monthly, weekly, and daily charts showing that we've got the beginnings of a very strong trend here. In fact, this has actually gone parabolic. This is the S-shaped curve that I typically see. Now, price can do whatever it wants to, but this is where we use the discipline of understanding the energies to this, and there is a limit to these. Typically, when you can see that when we get down into this level of linearity on the NASDAQ chart, things tend to go from range expansion to range contraction. The other thing that we're seeing is somewhat of a participation divergence as both the NASDAQ and the S&P 500 are making these new highs on fewer and fewer participating stocks in their index. So we've seen this time and time again over the past 20 years, and typically when this happens, you will see the index stumble a little bit, and then it will go into a form of consolidation. Now, if we go back to the S&P, again, what I've been calling for and thinking that this would be the smartest thing is I didn't really want to see the price break out on the daily chart above 4,200, especially on low volume that we had on Friday, because I think this is what gets retail to chase after it, and I think this is what institutions love to sell into. I still think the best route forward for this chart is a quick drop down to 4,000. Maybe we're going to get a sell the news event on the debt ceiling deal, which looks like it's probably going to get signed this week. And from there, we can set up a much better base, build up the negativity required to really push this thing through 4,200 with authority. I just don't think we're going to sustain a breakout above 4,200 when it tiptoes above it on low volume like we did on Friday. But the market is a very humbling thing. If the price continues to sustain closes above 4,200, I'm going to have to rethink my original thesis this week. That's it for today's Market Minute. We'll see you in the next one.